Welcome everyone. In today's case, we will solve a profitability case where I am the candidate and Doğa is the interviewer. For those who don't know him, he also has 4 years of experience at BCG. And let's see how he's gonna do as an interviewer.
Yeah, let's get started. All right, Deniz. So today's case is going to be about our client named Simeo. Is a large cement manufacturer in Indonesia. They are quite big in size with $1.5 billion revenues. But recently, in the past 2 years, they had an issue where they saw a big decline, in their profits. Their profit margin dropped by 8 percentage points from 10% to 2%. And the board asked the CEO to identify the main reason behind this profit decline and come up with a recovery strategy. How would you approach this case?
Fantastic. Thanks for the opportunity. So just to make sure that I understand the initial ask, the client's name is Simeo, which is a cement manufacturer. And we said that they faced profitability decline in the past 2 years. It used to be 10%, now it's 2%. And we're hired to help them understand some main reasons and also help them devise recovery strategies. Did I get it right?
That's right.
Fantastic. Just to start off with the definition of cement, is it the one that I see as concrete, the ones that's used to build roads perhaps?
Yeah, pretty much all kind of infrastructure, buildings, roads, and etc. You can suppose that those are the main target customers.
Okay. And we say that they're based in Indonesia, but does the client have any international operations?
Yeah, they do have a slight operations abroad, but mainly in the region, let's say.
Do we know the split of their revenues?
Most of their revenues, you can suppose that's in Indonesia.
Okay, all right. So for today's case then, is that okay if I just only focus on the Indonesian business?
Let's go, yeah.
Okay, fantastic. And lastly, what does the client see as success here? Do we have any financial or strategic objectives with this turnaround strategies?
Sure, yeah. So they want to generate at least $500 million within the next 3 years.
And that's cumulative 500.
Cumulative, yeah.
Fantastic. That's quite clear. If you allow me, I'd like to take a second to jot down my thoughts and I'll share my framework.
Please do, yeah.
Okay, thank you. May I start?
Yeah, of course. Let's go.
Fantastic. In today's discussion, I would love to categorize my thoughts under 4 buckets. First of all, I would love to understand the context surrounding our client and the market, which will then help me in my second analysis, which is the root cause diagnosis section. This is the part where I would like to dig deeper into the numbers and really understand where the problems are coming from. Third, based on those issues that we figure out, I would love to discuss some recovery strategies. And finally, as my 4th section, would love to discuss some risks. Now, getting into the details to understand our client's context, first of all, we said that the client's in the cement business, but we didn't really hear many numbers earlier. Would love to understand their business splits in terms of could be the product segments within cement, if there is some high-tech and low-tech product segments. And I would love to discuss the geographical split. We said to focus on Indonesia, but maybe within Indonesia, would the regions behave differently? And then would love to get to the customers. So I would imagine that some construction sites, developers might be interested in our product. So would love to see the split of our revenues right now. And lastly, we should look at the competition, their market share. I would love to emphasize that the areas that I mentioned so far are just a snapshot. I don't want to get into the trends yet. This will just help me really understand the problem at hand.
Yeah.
Now, to dig deeper in the root cause identification area, I would like to divide it into 2, quantitative and qualitative root cause analysis. On the quantitative part, we say that there is a drop of 8 percentage points in the margins. Does it come from the revenue drop or a cost increase or both? We should definitely take a look at this based on different revenue splits, based on customers, geographies and such, if there is any specific segment that is suffering more than the other. And as we do this, we should compare it with the competition. We should see if this issue is only specific to our client or whether we also see it market-wide. And as we do those numerical analysis, we should also understand the underlying drivers behind it. So more of a qualitative root cause analysis. What I mean by this is, say our profitability is going down, specifically our costs are going up in one segment. We would love to dig deeper into understanding, is it because of the labor union problems or perhaps just the wages overall increase throughout the country? So really just digging deeper into those issues.
Sure.
In terms of the recovery strategies, I don't know the problem yet, but just broadly, we can categorize it under direct and indirect strategies. So on the direct, based on whatever problems that we will figure out, whether it's on the revenue or cost side, we can look into ways to improve it by directly solving those issues. And on the indirect strategies, say our profitability is going down, but we can't do much about it. Can we make up for that loss via focusing on other regions, some revenue improvement ideas and such would be useful to discuss. And last, in terms of the risks, so these are the risks of those strategies that we will develop, which I don't know yet, but perhaps we can look into the likes of customer adoption or regulatory aspects. How does my framework sound like?
That sounds quite comprehensive. I really loved it. And then my question is, which specific section in the framework you would like to focus now?
Let's delve into our candidate's performance during the case study so far, starting with his strengths. The candidate showed strong business acumen by avoiding the common mistake of immediately delving into revenue or cost trends in profitability case studies. Instead, he took a thoughtful approach. First, trying to grasp the fundamentals of the case, like understanding the nature of the cement product, identifying key customer segments, and examining the geographical coverage. In terms of communication, he was very effective at making complex concepts in his framework easy to understand. He first outlined the broad components before going into detailed specifics, maintaining clarity throughout. Moreover, he consistently used nonverbal communication, often making eye contact with the interviewer, which helped keep the conversation engaging and personal. However, even with these strengths, there is an area for improvement. Despite not greatly affecting his overall performance, the candidate could enhance his root cause analysis. Incorporating factors such as price trends, volume changes, and variable and fixed cost trends into his framework would give it more depth and offer a more holistic view of the situation.
Yeah, for sure. I mean, let's start with the first column. We said earlier that our client's the cement business. Do we know how big they are and whether we have any segmentation regarding its geographies or product split?
Okay, so the size regarding so our size is 1.5 billion dollars, as I said, and regarding the geography, it's you can suppose that it's mainly within the country, Indonesia, and regarding the products, we used to have some other products, but now we only have one type of product, and which is ordinary Portland cement, that's called. And this type of product is sold to the large companies that we work traditionally with, and you can suppose that this is the market that we are targeting with only one single product.
Got it. And when you said that we are only operating in Indonesia, or that is the number we should take, do we have any further segmentation into certain cities, or should I just look into it countrywide?
Yeah, countrywide. You can
Okay.
suppose it's countrywide.
Fantastic. And then we said that the only product is ordinary Portland cement. And you said that we are selling it to large companies. So what kind of companies do we deal with? Do we have any segmentation?
Yeah, so basically, we have three groups of companies. First one is the construction firms that work in a big infrastructure projects, like roads, subways, etc. And then we have heavy construction firms that build large buildings, private or public funded. And we have small construction firms, so three segments.
Okay. So just to clarify, I got the second and third. So the second one is heavy construction companies. The third is small customer segments, the small construction companies. What was the first one again?
The construction firms work on large infrastructure projects.
Got it. Okay, fantastic. And do we know the split by any chance? Not the trend perhaps, but as of today.
Yeah, so I can show you an exhibit and you can find the related information in exhibit number 1.
Sure, let's do that. Thank you.
Yeah, please find the exhibit number 1.
Okay, I'll just take a second to take a look at it.
Yeah, sure.
Brilliant. Here we see that out of this $1.5 billion of the client's total revenues, the vast majority of the business is with large infrastructure companies. I would say somewhere around almost 70%. Then it's followed by heavy construction, light construction companies. So we're dealing with a huge issue here of profit margin decline. So perhaps the issue is coming from the large infrastructure given how big they are. But to further validate this hypothesis, do we have any data regarding the revenue or even the cost trends for each of those customer segments?
Yeah, sure. Good summary. So we don't have information on the cost side related, like segment-specific information on the cost side, but we have segment-specific information regarding revenues.
Great.
I can show you another exhibit, if you like, showing the trend of the revenue evolution by segment.
Let's do that.
You can find it in exhibit number 2.
Thank you so much. I'll again take a second.
Yeah, sure.
Fantastic. It seems that besides having the revenue level data, we actually have one level deeper, which is quantity and price side. And it seems that looking into the quantity first, then I'll discuss the price evolution. On the quantity side, we see a drop in large infrastructure as well as the heavy construction projects over time. But the issue within large infrastructure is bigger here. And in terms of the price side, it seems like we've actually increased the price. So I'm not really sure if this is an issue. So I would love to further discuss why we see a drop in the volumes of those two segments. Here, there are only two possibilities. Either the market is going down or that we're losing market share. Do we have any data regarding those?
Yeah, very good analysis actually. Former hypothesis is correct. So market is going down, especially in the big projects. So those projects were traditionally funded by the government. And in the past years, it's an issue across all emerging economies, but especially in Indonesia, there has been also a decline in the public spending on infrastructure. So it caused a lot of reaction from this construction firms. They cut the demand as a result, and that's how we struggle at this point as well.
And is that due to COVID or is there any other reason?
No, it's a general COVID contributed to that a little bit, but it's just like general trajectory across emerging market economies.
Got it.
Actually.
So there's an economic crisis and that led
Similar.
to a market shrinkage, and then as a result, our client was unable to sell as much
Exactly.
in the past several years.
Yeah.
But just to be sure, do we see any decline in the market share or did it stay stable?
It's around the same.
Okay.
Around the same for that segment.
Fantastic. So then this would mean that other competitors also faced a similar issue.
Very similar issue.
Okay. That's fantastic. Looks like now we've exhausted our revenue diagnosis. Now let's move on to the cost. So you said that we don't have any data on the segment level, but do we have anything on the consolidated level by any chance? Because I want to make sure that there is nothing wrong on the cost side.
Sure, I can show you our P&L for the past 3 years if it works.
Yeah, let's do that.
Awesome. So please find exhibit number 3 where you can see the variable cost, fixed cost, and EBITDA.
Okay, that's great. I'll just take a second. Great. Here I see EBITDA, which I think is profits.
Right.
And then we have fixed and the variable cost. And if we sum all of those three figures, we should get to revenues, right? Which is at the top of the bar.
Sure.
Okay. It is clear that there's a revenue decline. We've discussed this before. Now, moving on to the cost side, so let's get started first with the fixed costs. It used to be 272, which then increased to 80. In terms of the percentages, though, it is a very minimal increase. So I'm not too bothered by it. I would imagine that it might be even due to inflation or other reasons. Of course, it probably contributed to an extent, but probably not the major concern of ours.
Yeah.
In terms of variable costs, I see variable costs going down, similar to the revenues, but we don't know whether it is going down proportionately. If you allow me, I'd like to just take a second and would love to compare those 2 years, maybe 2020 and 2022, just to make sure that the variable costs remain the same in terms of revenue ratios.
Yeah,
Would that be okay?
let's try to calculate the unit variable cost change.
Fantastic. All right. So on 2020, I need to divide 1.35 or 1,350 by 1,800 to get to the ratio. So those two values should be divided by 450. So that's 3 divided by 4. 75% is the variable cost to revenue ratio on 2020. Now, moving to 2022, is that okay if I skip 2021?
Yeah, let's only compare 22, 2020.
Okay, fantastic. That saves me some time. Now, let's do the similar calculation here and divide 1,200 by 1,500. Each values could be divided by 300, so it's 80%. Interesting. It seems like there's an increase in the ratio of variable cost to revenues from 75% to 80%.
Okay.
What this tells us is the following. In a normal business, in a normal business cycle, you would expect variable cost to revenues ratio to remain the same.
Mm-hmm.
But in this case, there is an increase. So I would love to understand what might be some causes to that. Do we have any data?
Yeah, what might be the main reasons for this?
So we said earlier something about the economic crisis, right? So this means there's a lower demand. And I would imagine that if there's lower demand for such raw materials, whatever we use to make concrete or cement in this case, due to a lower demand, if the supply doesn't change, the costs or the price would go up, the procurement cost. So that could be one reason. Or maybe the client recently changed the supplier and now they have any inferior deals. Do we have any information regarding those?
Yeah, so both of those reasons potentially are correct. On top of that, we have another issue, which is the change in the currency rate. So the currency depreciated against dollars, and it increased actually some cost of some items that we use in as a variable cost. So that's also one of the reasons contributing to this trend.
So our client is procuring their products based on the foreign exchange.
Yes, foreign exchange denominated products.
Interesting. So just to summarize our learning so far, there are two main issues. One of them is on the revenue side, we're selling less to our major accounts because there is economic crisis.
Right.
And the second issue we discuss is our rising, especially the variable costs. Yes, there is some issue on the fixed costs, but more on the variable costs, that because of economic crisis and it led to some inferior deals for us. If there is nothing else to add, is that okay if I come up with some recovery strategies?
Yes, let's go to the next section.
Okay, fantastic. For this, I would need a minute if you don't mind to come up with some ideas.
Yeah, please take it.
Thank you.
Let's take a moment to review the key strengths of our candidate's performance so far. Firstly, we have case leadership. The candidate demonstrated strong leadership throughout the case. He adhered to his framework and took the initiative to suggest next steps, effectively reducing the need for prompts from the interviewer. Next, let's discuss exhibit reading. The candidate was meticulous in his approach to each exhibit, always taking the time to fully understand and digest the information presented. This helped him to quickly draw out meaningful insights and articulate potential root causes of the profitability decline. Finally, problem solving. Here, our candidate truly excelled. When faced with one of the case's most complex challenges, identifying issues with variable cost structure, he didn't falter. Instead, he suggested comparing variable costs to revenues, a strategy that mirrors those used in real-world consulting scenarios.
I'm going to use my earlier structure, which is direct and indirect strategies here. On the direct side, let's look into revenues and the cost aspect. So on the revenues, the issue was the economic crisis. And I'm not entirely sure how much we could do for that. But when I look into the segments, perhaps there is a way for us to justify a higher price. So I don't really know. Cement is a commoditized product, but if there is anything we can do as an added on, maybe service, maintenance services or payback guarantees and such, then we might be able to increase our price point. But in terms of the volumes, I'm not entirely sure if there is anything to be done there, especially on the segments that we're losing. In terms of the cost side, we can look into ways to reduce our variable costs because we learned earlier that we're currently having it on foreign exchange rate. So is there any way for us to perhaps fix the exchange rate, something we see in many developing countries, and get better deals for us, or simply change the supplier. That could also be another way of doing it. On the fixed costs, maybe there's a way for us to optimize our labor or rent payments and so on. In terms of the indirect strategies, I do not fully recall the name of the segment, but that was one segment in one of the previous exhibits where we see an increase in the sales. I think it was light construction companies, if I get it right. So I know that it is a small business, but at this stage, any increase would help our clients. If there's any way for us to double down on this segment, that could also be useful. What do you think of the ideas?
Okay, so regarding new products, we don't have a good experience in launching new products in the past. So I don't think the management team will welcome this idea much. And regarding cutting costs, so you're right with the suppliers. Actually, it's one of the key areas where we can potentially cut some costs. But we renewed almost all of our projects with new suppliers in the past years. So that option already tried. And regarding new segments, so this is not our strong arm, and we don't think that we can steal much market share if we concentrate on the small small construction companies. Even though we increased our revenues, we will face huge competition there. So neither of the options will help much actually.
Okay, so I'm a bit puzzled here. If we cannot do anything, what could we do?
I don't know, something maybe extraordinary solution that we can come up with. I really don't know. That's why we are asking you.
Okay, may I just take another second then to think about some additional ideas?
Yeah, sure, please.
Interesting. Okay, I think that is something we could do. If there is not much we can do, maybe there is a way for us to reduce our recurring expenses, whether it's fixed or the variable cost side, by shrinking the business. I do see it in many cases, especially recently as well due to COVID. Many of the retail-oriented and entertainment-oriented businesses actually did have to shut down, but then they're starting to open back their business. So I'm wondering if the client would consider some drastic measures like this, maybe not a full shrinkage, but a reduction of their certain operations, especially where we are unprofitable, may help us in saving some of our recurring costs, maybe fixed costs especially. And ideally, once the economy starts to recover, we can again double down on the segments that would give us a good profitability.
Okay, so it's because we have an objective of 500 million, so you try to find some ways to generate 500 millions by shrinking like our size, selling something, equipment, etc. Is that what you mean?
Exactly. So I would also imagine you raise a great point. We can even make money through sales of certain assets, perhaps, to get to that level. But in any case, I find this very challenging because the client's total revenues are 1.5 billion. And we are saying that we want to generate a cumulative total cash of 500 million in the next couple of years. I'm not entirely sure if this is even feasible to start with.
Yeah, that makes a lot of sense actually. So,
okay.
Yeah.
Great. Would you like me to discuss some risks as well, in addition to the ones that we discussed so far?
Yeah, before we conclude, please.
If you allow me, I'd like to actually walk you through out loud now. The first thing I'm thinking about is this economic downturn element. We need to make sure, or at least we need to do more forecasting to understand in how many years we would expect the economy to go back. Because if economy continues behaving the way it is right now, there won't be any more business. Right. So we need to make sure that we look into this. And the second aspect is the competition. Here, we said earlier that our market share declined as per the overall market, and hence our market share didn't change, meaning probably other competitors are doing similar business to us. But in the future, if there is another ordinary Portland cement, maybe there's a new, more innovative product, we may actually see a decline in our sales more. So I would also love to check with the client if they have any other, more maybe a high-tech solution, an alternative that they can also work in parallel to their day-to-day operations. How does it sound?
Yeah, sounds good actually. But for the economic downturn, I won't be much concerned because we already experienced that and we don't have an investment. We don't have an expansion plan, so I will not be concerned much about it. I think it's a good time to cut some costs. And for the competition, our issue is a little bit more internal. It's not like like market-facing initiative we are taking. So competition in shrinkage will not hurt much actually. So
Got it.
neither of the risks are very vital for now. So I think you found the conclusion, and we can go ahead and
Fantastic.
close it at this point. Yeah,
Okay, may I just take a moment for it?
please do. Yeah.
Fantastic. Based on our analysis, I would tell the client the following. First of all, it seems that there are two major factors behind this profitability decline of 8 percentage points. First of all, the overall market is shrinking in the past 2 years. And as a result, there is now less spending on heavy construction, large infrastructure projects. And as a result, we're making less of a sale. The second problem contributing to this is our worsened variable cost structure. Yes, our variable costs are going down, but it's not going down in proportion to the revenue decline.
Mhm.
And that is just simply because our deals were fixed on, or our deals were based on foreign exchange rate. Now, in terms of coming up with the solutions, we've looked into many alternatives, but it seems like the one that we can really do at this stage is to shrink our business to an extent that ideally it will give us some of a shelter until the economy recovers. But at the same time, through sales of certain assets, we might be able to make some money. However, I would love to emphasize that given how big they are right now, a sales of $500 million, or the objective of it rather, may not be feasible through a simple sales of assets. So it is a number that they need to look into a little bit closer. And in terms of the next steps, I would love to tell the client that we are here to help them in the implementation of the strategies. And of course, we can look into further on what other ways we could improve their profitability.
Sounds good. Perfect. Great conclusion. Thank you so much. Thank you, Deniz.
Fantastic. Thank you.
Overall, the candidate demonstrated a strong performance throughout the case, showcasing a variety of essential skills. Let's delve a bit deeper into the details. Under problem solving and insights, his structure was comprehensive but could have been further strengthened with the explicit mention of price, volume, and variable and fixed costs. His judgment was marked by strong business acumen, which aided him in pinpointing the causes of profit decline and devising potential turnaround strategies. As for rigor, despite the case not being heavily number-oriented, he showcased his analytical prowess by running the variable cost ratios and pinpointing that the $500 million cash objective might not be met. In terms of creativity, he successfully identified the underlying drivers of the revenue decline and cost increase, and adeptly proposed effective turnaround strategies. Finally, his synthesis skills were on point as he proficiently interpreted each exhibit and delivered a conclusion that covered both the diagnosis and proposed turnaround strategies. Moving on to communication and presence. His presence was marked by a commendable level of confidence and by taking occasional pauses to gather his thoughts. He was able to maintain his composure throughout the case. Precision was another strength. His concise responses and prompt insights ensured the case was completed in less time than usual. In the realm of active listening, he responded well to the interviewer, but could have clarified earlier whether the $500 million objective referred to profits, cash, or revenues. Lastly, under relationship management, he successfully established a positive rapport with the interviewer, keeping him engaged throughout the case.